how do you guide your clients into what type of deductible they should have?
It's not about the cheaper rate. It's about what's best for whatever you have.
One of the biggest drivers is they're actually giving you a lot more coverage today versus 3 years ago. Let's go.
Jude, welcome. So today we are here with Jude Romano, the insurance goat, and we'll be talking about why insurance rates are skyrocketing, why insurance is so important, and his top 3 tips for property owners. Let's get into it.
So actually, this has become the biggest topic for me every day with clients and interactions and phone calls. Unfortunately, over the last 24 months, it's not really pleasant calls anymore. Everyone's calling me essentially to complain as I get it. If you currently have a commercial policy or any policy for that fact, rates are at least double today, at least double. And, for people that are buying new properties, I don't think that they're accustomed to understanding the cost in insurance today. And I think even people in the respective business of lending and real estate are not expecting these costs, and they see the quote and they're like, oh, this is too high, call my guy. But
so are the rates skyrocketing and doubling across commercial, residential, and everything, or is it just one sector?
No, it's up across the board, primarily on property. Why? Because we're seeing a rise in increase over the last 3 years in the value of homes and properties, sense. Right? So what the insurance companies have done, and a lot of people don't understand this, so hopefully this helps people understand the simplicity behind it. If a property 3 years ago was valued at 6 and that same property today is valued at 1.1, the insurance companies are understanding that they have to increase the coverage so that in case of a total loss on rebuild, they have enough coverage to actually do that. And then take it a step further, the contractors today are charging more per square foot on rebuild. So a lot of people think that the costs have just gone up, but in fact, one of the biggest drivers is they're actually giving you a lot more coverage today versus 3 years ago.
Okay, so basically your property value is going up, your insurance goes up. It's all kind of in sync is what you're saying.
Yeah, I mean, listen, it's a very simple question. Specifically when we have this conversation with residential homeowners, when they say, why did my policy go up, 30%, 40%? We simply ask them one question. Mr. Customer, your home a few years ago was valued at 6. What is it valued at today? And, my home's worth $1.2 million. All right, well, so Mr. Customer, it's fair to say your home went up almost double in value, right? So did we expect your insurance to stay where it was?
Good analogy.
Right? I mean,
like
so
it. Great.
It's just, we try to simplify things without making it a complex conversation.
I wish that would happen with real estate commissions and title policies.
Exactly, right? So at what point, a property is considered commercial, like a multifamily home, at what point is that written under commercial insurance compared to residential insurance?
Yeah, so 4 units or more. And in fact, today, if you have 3 family or more, there's a lot of insurance companies that dropped out that don't even want to write that many units.
Wow.
They consider it high risk. So
I did hear that. So every state is different, and I know you are licensed in 14 states, which is crazy. I don't know how you can handle one state with all the rules and regs, let alone 14. But what are the worst states that are affected? We're here in New Jersey. Are our rates significantly higher than other states for property insurance? What do we do about that? Is there anything we can do? Should we buy in Florida instead of New Jersey? What should we do?
So any state, well, let's take a step back. Forget about the state. Any property that is located close to the water, very, very high rate right now. Coastal, people see these storms happen in other states such as Florida, and they live in New York, New Jersey, and they say, well, that storm didn't affect us.
Yep.
But the same insurance company who insures your home in New York and New Jersey also insures homes in Florida. So if they take a loss in Florida, you're going to pay for it here in New York and New Jersey.
Makes sense.
Right? So when you ask me, is there a specific state, there's really no answer. But what I would say to people is think of states that are catastrophic right now. If you watch the news where the storms are happening, where the tornadoes are happening, the hurricanes are happening, the floods are happening, insurance companies are managing risk. So if they see that the storm pattern is only getting worse, they have to bring the cost up.
Okay, that makes sense.
So can you tell us why is commercial insurance important? Because some people might be like, okay, that's too high for me. That's too expensive. Why am I paying this much? But why? What? How are they protected?
Great question.
That's a great question. And, I work with a lot of restaurants, and I would say a quick point out that a lot of people don't understand. And it's so sad because it doesn't affect people until they actually have a claim. So hypothetically, you insure your restaurant, and there's a few small coverages that cost minimal money for the year, and people leave them out because they're trying to cut costs. So we'll use one example, food spoilage. You leave food spoilage out, you have a monster restaurant, you have $200,000 worth of food in your walk-in box, and you lose power. You don't have food spoilage.
You're fucked.
You're fucked. And realistically, this could be something that's $160 to $200 for
$200,000.
I know.
Yeah.
I know.
That's the more appropriate. You're out $200,000.
Yes.
No,
Damn.
but
Can you claim that on your landlord's insurance?
no,
Okay.
no, you cannot. You cannot. Another one. Business interruption, right? What does that mean? So for a guy who's an investor, a girl who's an investor, and they got a 40-unit property, and they collect rent every month from that property. If there's a fire in that property and they have to take the tenants and shift them somewhere else, how are you gaining that rent in the 3, 4, 6, 7 months that building is being rehabbed?
It's called foreclosure.
Right?
If you have no insurance.
Does that fall under BOP? Or what's BOP? Can you tell us what's BOP?
It may fall under a BOP. A BOP is just essentially a BOP is a business owner policy, and a BOP really fits the demographic of low risk business.
Okay.
So a business that, for example, is not selling liquor. Okay. A good example would be maybe a deli who has no lotto. They're just selling, sandwiches. They're open from 7 to 3. Very low risk. A BOP can fit for that type of client. But anything that has a riskier exposure, such as, a restaurant that sells alcohol, such as a restaurant that stays open late, such as a mixed use that has a restaurant and 6 units above, that does not qualify for a BOP. The standard insurance policy for these types of businesses would be called commercial package policy.
Okay. So I have a question for you. So being a landlord, I've experienced a couple of very exciting reasons to have insurance and to claim insurance. One of them being a total loss where I had a major fire, which and my insurer was LG at the time. It was a mixed use commercial building. And the loss ended up being like a $3 or $4 million loss, and the company actually pulled out of New Jersey because of this loss, I'm told. So I had the fire. The building was now gone, right? So you can't build a building in 12 months. So my loss of revenue, or my business loss of rents, right? So there's a thing. It's just like business interruption. It's called loss of rents. I pay to have my rents paid during this time of no rent. So, because remember, most people have mortgages, you have to pay your mortgage. So this loss of rent still allows you to pay your mortgage. My building was gone. So after 12 months, my rent coverage ran out. So I was had nothing.
Yeah.
Is there any other insurance policy or something that can cover me after that 12-month period for a situation like this?
I'll be honest with you, not that I'm familiar with. That's a unique situation. I mean, most interruption rent loss usually goes for a certain dollar amount or 12-month period, whichever is exceeded first. So that's a very unique situation.
It was unique, and it actually gave me a really nice wake-up call. So you never really know that your revenue is really not safe. Imagine bad example, but World Trade Towers, right? So imagine you were that landlord and that was your only income stream. And then it goes away. And even if they had loss of rent for 12 months, you can't build that back. It takes years to do that. So
That's right.
What happens to you? You're ruined.
Right. Well, when you're talking about buildings at that size, that value, there's a lot of different policies. There's a lot of self-insurance that comes into play as well. But yeah, that's an unfortunate situation. I mean, usually if you figure on a standard property, 12 months, you're fine.
So that's the max that you're aware of?
Again, depending on the value of the property, for a standard risk, 12 months is usually the max, yeah.
Okay, good to know.
So, Jude, you said insurance is boring, right?
Yeah.
So, but you make it so much fun.
Yeah.
So, can you tell us a little bit about how you make insurance a little bit fun on your social media?
Yeah, sure. I mean, so this is probably going to surprise a lot of people, but the truth is, I hate insurance, and but I found an outlet on a lucrative industry on how to earn a living, to maintain my lifestyle, my family, etc. But I believe that a lot of people that do things today, people in the mortgage industry. Today, I don't think anyone wakes up and says they love it.
I love giving mortgages.
They find a lane that they
Especially
think they
these
can do
days
well in.
with what's going on.
So when I created the insurance scope, my thought process was, how do you take a really very boring, complex industry that a lot of people have challenges understanding, even people in the insurance industry have challenge understanding things, and just put some humor into it. Okay. And my truthfully, my personality on a day-to-day basis is I like to wake up and really just have fun and appreciate each day. So I just essentially just put my full self into the insurance business, and I believe what you see on camera, off camera, during business, after business, you're always going to get the same guy. And I believe that people like to level with people that they understand. Some people who talk to you may say, Jude, just take off your professional hat for a minute. Let's talk. And that's how I run my business.
Okay, good to know.
So how did you get into the commercial insurance?
So I worked for JP Morgan Chase for about 15 years. I was a commercial banker. That's how I ended my career there. And so I loved working with businesses. And I did enjoy that because I enjoyed getting to know different types of businesses and what it took for them to be successful. And so I thought insurance was a very good outlet for me to kind of pivot, but still stay very well acquainted with business owners. And I'm able to help them take away some of their pain points with things that stress them out and they don't understand too well.
Insurance can be very stressful, especially when you don't know that you need it or that you don't know how to work together. When you have a lot of properties and businesses,
You have to be creative.
Everything has to be tied in. And it's great to have someone as your main point person as opposed to having like 12 different insurance agents.
Absolutely.
Yeah.
And listen, I'll share this with you guys really quickly. I myself, being in the business, I'm getting a new vehicle, and I'm getting the same vehicle. It's just three years newer. So I call up the insurance company, take the old vehicle off, put the new vehicle on. My insurance policy doubles. Nice. I'm in the business. So now I'm on the other side, feeling the way other clients are feeling, like, well, I'm getting the same car. Why is it doubling?
Because the value of the car you just got is worth twice of what the car that you got rid of.
I mean,
how's that? I used your own words
your own
against you.
Explanation, right? About the value of your home.
There's a lot of validity behind that. There's more technology. It's more expensive to repair, right? So, but yeah, it's definitely tough for people today. It's definitely tough. And everyone is cost sensitive today because interest rates are high. And
so that's a great question, cost sensitivity. So because everybody is feeling the pain of these rising rates, deductibles come into play here. So you can have a small deductible, a big deductible. How do you guide your clients into what type of deductible they should have?
It's actually, honestly, it's not something a lot of people ask, but it's a good question because, so we'll use an example on a traditional homeowners policy. If the homeowners policy premium for the year is, let's call it $2,500, and their deductible is $1,000. Okay, if they're price conscious, I always recommend move it up to $2,500. It would take the premium down roughly around, let's call it $400. So now their premium goes down to $2,100. And the reason why I always suggest that is because I would never advise a client to put in a claim for anything less than $5,000 anyway. So I would never advise a client to use $1,000 deductible as a resource of payment. Well, if you called me tomorrow and said, Jude, I have this claim, it's $3,800, I'm never going to tell you to put in a claim. It's just, unless you financially have to.
I think most of my deductibles hit around $5,000.
I think that's a really, really good number, actually. Especially for someone who's a business owner and understands the cost.
So that makes sense. So on that same point, let's talk about umbrella coverage. So that's a question that I always don't understand. I have a bunch of umbrellas. Sometimes I don't know which umbrella to use where, and it gets confusing for me.
So And you're actually giving me all great questions that I love, because this is something that I've had to research on my own. And so how do I explain umbrella coverage to a client in the most simplest and quickest way?
When it rains, it pours.
Take your net worth, figure out your net worth, and whatever that number is how much umbrella coverage you should have.
Okay, because umbrellas are cheap.
No, not no more.
I don't know. I feel like mine are a couple $100 or maybe $1,000, but I just for the amount of coverage, because they start at like don't they go to like 3, 5 million?
1 million, 2 million, 3 million, 4 million, 5 million.
Okay.
You could go up to, depending on what carrier you're with, you can go up to 30 million if you
Wow.
want,
Okay.
Depending on what carrier you're with. If you're with, there's carriers out there who are designed for high net worth clients.
So do you recommend everyone have an umbrella, or what's your guideline? So
again, what is your net worth? If your net worth is $3 million and your auto coverage is $500,000, well, if you kill someone in an accident and you didn't mean it and you get into a car accident, right? What's your net? If your net worth is $5 million and you have $500,000 in auto coverage but no umbrella policy, the person that you've either injured really bad or killed, they're going to come after all of your net worth. So do you want that protected? So if you have 5 buildings and those buildings are valued at $10 million, do you want it protected?
Of course.
It's a simple question, right? It's a simple question to people. They don't even understand. Oh, why didn't you need an umbrella? Do you want someone to take your money if you hurt them?
I think you don't have that many umbrellas because you have most of your properties under LLCs,
well,
which protects
the
you.
next question I was going to go with. How does that LLC factor into whether or not you need an umbrella?
Well, I mean, when you're driving your vehicle, that's under your personal. Yeah? So your LLC should be protected by the entity name. Yeah. So it should be separate from your personal name.
So if I have a building worth $10 million,
yeah,
and then I'm driving my car, which is under my name, and I hurt somebody, unfortunately, can they go after my building that's under an LLC?
But
I'm the owner of the LLC.
The black and white answer is they can't. But if it could get a little complex, and it's probably a deeper question for an attorney. If you find a really good attorney, I've heard that they understand how to pierce an LLC.
The corporate veil.
Yeah. So
if you move money around.
This is where it goes above the level of the insurance guy.
So you're basically
we can just put it in a trust and be safe.
Good point.
Yep.
Or just get an umbrella policy
or get an umbrella policy.
What is like a $2 million umbrella policy cost?
So
roughly?
I mean, it's tough. It's tough to answer roughly. Why? Depends how many vehicles that person has, how many homes they have, how many residents they have.
Your average, you have 2 cars, 2 kids, husband, wife.
Yep.
2 husbands.
Clean driving record, $600-700 a year for $2 million.
So for $600-700 a year, you get $1 million.
$2 million.
$2 million.
Yeah.
That seems like it's well worth it.
Yes.
So yeah. I mean, I do want to sleep at night.
Yes, exactly. You never know what happens these days.
Very true.
Yes. So what advice do you give for someone who wants to get into commercial real estate? Do you encourage them? Do you love it? I mean,
commercial insurance?
Commercial insurance. Yes.
It's interesting. I was on a podcast a few months ago, and this was a question that was asked.
I heard that answer.
And the truth, if someone wants to come into insurance today, it is a very, very, very bad time for them to come in, because if you're established and you have a book of business, then you can ride the wave of the bad times right now and, carry on for 2, 3, 4, and 5 years, God willing. But if you just come into this business, you will not last. You don't have the knowledge. You don't have the markets. You don't have the carriers. You have no trust. And there's not enough market share out there for new guys to come in and hopefully scoop up business. There's not.
What makes it a bad time right now? The fact that there's already so many insurance people out there, or the fact that the rates are going higher, so companies are pulling out of states? Why is it a bad time?
Well, it's a bad time because rates are really high. It's more of a bad time because, let's just, for conversation purposes, let's say there's 100 companies that were insuring 3 years ago. There's 30 today.
Okay.
Right. So, and what that does is it takes all the people in the insurance industry and the people with lack of knowledge, it pushed them out. Because the people with lack of knowledge don't know what to do.
Yeah.
Right. It's the same for all the respective businesses we're dealing with right now, real estate and mortgages, and respectfully to all of the people in those professions as well. Those people are dropping out of the business very quickly.
I love when people drop out of the business.
Oh, me too.
Because,
yeah.
I do feel that sometimes there were such low barriers of entry, and, we have a real estate school, and we are very aggressive with what we teach, but there are other schools out there that just don't really care. And some people get in and it's like, you don't even know what a building is. How are you here? How are you advising people?
I'm not in the real estate business, right? But and I don't want to be disrespectful to anyone, but
here it comes.
I really I mean, it bothers me when you got that person who got their license to sell their Aunt Sally's home and that's it, and then they're out. Like, it's disrespectful to the people who take it seriously every day.
Thank you. I appreciate
It's very disrespectful.
Well, it's all the industries. Like how many mortgage lenders now are out. A lot of realtors are out. A lot of insurance people are out. A lot of title people are out.
And you could tell when people are hurting because they want to put their hand in your pocket. Hey, Jude, can you help me with this? And then it's like, okay, so you're not doing any business. And a lot of this is public data. And that's what a lot of people don't realize. It makes me laugh. Like, all these people who are afraid to put pride aside and say that they're doing bad, you literally can access people's numbers. You can see how many real estate transactions they've done, how many loans they've done, right? So it's interesting market.
It's fake it till you make it.
Yeah, apparently, right?
Which, like, we've all done it. When I first started in my business,
we made it. That's the
we
difference.
did make it. Yes, it was a lot of hard work.
Yes.
Yeah. And we did it, but thank God for insurance. I've had at least 3 fires in the last 5 years.
Yeah, I don't. By the way, for the record, don't ever call me for insurance after this podcast.
They called me the fire starter. No, I'm just kidding. It was nothing that I had to do with anything, but it was a great learning experience for me, dealing with different companies, Travelers, Hanover,
all good companies.
And talk to us about just understanding the difference between companies, because you don't know what you're getting into until you have to file a claim.
Yeah.
Like, oh my God, a AAA versus a B versus a C versus a what? Like,
yeah. I mean, listen, if you're a person who cares about all the stuff you work so hard to build in your life, then you should treat insurance the same way. You should go with strong financially rated companies, companies that have a very strong financial backing and will not give you trouble paying. There are a lot of companies that are owned by a bigger name, and some people say, like, oh, I never heard of that company, and you say, well, this company owns them, and you say, oh, all right, I know. They're like, oh, for example, Allstate has 5 companies under their umbrella, right? So I never heard of this company. You say Allstate owns it. Chubb, very high net worth insurance company, they're owned by 12 other monster insurance companies. So
does that make it good or bad?
I say neither. I mean, bad sometimes from a service perspective, because these companies get so big that you get lost in the shuffle. But good just because more financial resources back in the company.
So give us like the do's and don'ts of, if you're new in this business, what do you look out for? So you talked about the deductible.
Yeah.
How do we know if we're picking the right insurance company?
I usually would tell all of my clients I like to see 3 solid quotes on the table from 3 reputable companies. And then, depend if some companies will price the policy out, and that's just because they don't want the business. So if you see one quote at, let's say, $12,000 and one at $20,000, you say, well, what's the difference? And sometimes there's not a big difference between the 2 quotes. It just means that the company who's at 20 doesn't want the business. But if you jump at it, you take it, I mean, we see the same in construction. These big contractors that don't want a job, they'll bid on a job. The job should be bid at 1.5. They'll bid 2.2 because they don't want it. And sometimes they'll end up getting it. But then if they get it, they say, all right, well, I was 700 above and I got it. Right. Same concept.
Okay.
Same concept.
We can't do that in our business.
No, we cannot do that in our business.
Let me ask you. I'm going to put you on the spot on camera. You speak to some insurance people. You have some insurance experience. What's your thoughts on talking to someone who has knowledge in the insurance space? Do you feel like, from having this conversation with me right now, that that maybe there's more knowledge on this conversation versus someone you talk to about home and auto?
So, after speaking to you, I want to know how I can become a GOAT too. But I do feel that you have a good grasp of it. And having been in the business real estate for 20 some odd years, dealing with tons of different brokers, people trying to get my business all the time, it's very important to have someone who's well-rounded. And you do seem to have that as your basis. So I do look forward to having more in-depth talks and discussions as to some of my fun experiences with insurance. But you got to have the right person. So you got to have someone who answers your phone calls, especially if you're in the business. If you're
especially
in the
we're saying don't push anything on anyone, as our previous conversation. Like, I don't get the vibe from him that he pushes anything on anyone. He's more about like educating you on what's best for you. And I always get people try to switch me like from what company I'm insured with. Look, I can get you that. I can get you that. I can get you cheaper. It's not about the cheaper rate. It's about what's best for whatever you have. So the right broker will be like, okay, let me see what your assets are. Loyalty. But also like let me give you the best, platform to protect you. Let's plan it together. Like, finding out all your information. On my homeowner insurance, like someone just got me the cheapest rate. He didn't ask me, do you have a pool? Do you have a fire hydrant in front of your house? Because that makes my policy cheaper.
Sure.
Like, people don't ask the right questions. And that's why you need to be with someone who is very educated, very, very honest, and who cares. Remember about helping people, right?
Yep,
that's what you're here to do. It's all about helping
That's why we're here on this planet, to work together. But I do love the fact that you ask the right questions and you seem to know what you're doing. And a lot of our viewers are looking for insurance.
So, yes, the Jude Romano, the insurance goat. The top 3 tips you can give for people who are real estate professionals or property owners when they're looking for insurance. 3 things to look out for.
So for real estate agents?
For real estate investors.
And real estate investors and clients, sure. I would say most important tip, do not switch your insurance every year. Insurance companies actually hate that. And one of the first things to look at in the metrics is how many years prior coverage with the existing carrier. If they see you switching every year, it's the worst thing. People think they outsmart the system. You are not outsmarting the system. These insurance companies have billions of dollars, and they see the people who switch every year. So that's tip number 1. Tip number 2 is, don't sell yourself short. Don't gyp yourself on saving $100 on something that could be detrimental when needed, right? Like something that you might say, oh, I don't need that for $80, but then if God forbid something happens, you're wishing that you had it, right? What is the definition of insurance? In case shit happens. So you never need it, and you think it's the truth, though. That's what insurance is. If someone says, Jude, what does insurance mean? In case shit happens. Well, what if it don't happen? Again, in case it happens. So do you want this protection?
Law, right? If you don't have insurance, it'll happen.
Do you want this protection in case something happens? And then my 3rd tip would be work with a trusted advisor. Work with someone who knows the business, who takes pride in understanding it, not someone who's just looking to sell a policy. I'll end on my tips on this note. Yara just mentioned something a moment ago, and that hits home for me. I haven't sold anything to a client in the last 8 years. And during your youth, when you're trying to navigate through the business and understand where you stand, if you're in sales, you're a salesman. But at this stage of my game, there's no sales. People say, oh, you're a good sales. I actually get offended. I'm not a salesperson. I deliver value, and if that value is important to you, then we work together. And if not,
there you go.
There's a lot of people out there, and I can't help them all. So I have to protect my time on who I work with.
Thanks for watching this episode. Now don't forget to like, subscribe, and leave a comment. And we'll see you next time.